Do you think the money you deposited in the bank is lying safely hidden away in a locker? If I told you that your account balance is just a number on a computer screen and your money is not actually there, would you believe it? Friends, banks perform the biggest and most legal magic in the world. They take your money from you, invest it in places you are not even told about, and earn crores from that money. In today's video, I'll tell you the hidden truth that banks never want you to know. Where are banks using your money? And is your money really safe? Let's find out. Welcome to the secret world of money. If you try to understand how banks work in detail, the first concept that comes to mind is fractional reserve banking. This is a rule that explains the entire world's banking system. Suppose you deposit $1,000 in a bank. You think the bank has kept that $1,000 in its vault, but the reality is that the bank keeps only 10% of it, which is $100, and lends the remaining $900 to someone else. And when that second person deposits that $900 in a third bank, that bank also keeps 10% of it and lends the rest. This is how banks create money out of thin air. Don't worry, this is not illegal. This is the way banks around the world operate. How banks make money. Now the question is, how do banks make money from this process? Understanding this trick is the most important part of personal finance and financial education. It's called the spread. When you open a savings account, the bank gives you 1% or 2% interest profit per year. You're happy that your money is growing. But at the same time, the bank lends that same money to a businessman or to someone to buy a house, or gives it out as a credit card loan. And the bank charges them 10%, 15%, or 20% interest on that loan. Yes, that means the bank borrowed money from you at 2% and then gave it back at 15%. The 13% profit in between went into the bank's pocket. Without investing a single rupee of yours, banks are becoming very rich with your money. If someone asks you how banks make money, then this is the spread. Where exactly is your money going? So where is your money going? Banks invest your money in three main places. Number one, corporate loans and mortgages. Your money is given to large companies to start new projects or as mortgages to people to buy homes. These loans last for 20 or 30 years. Number two, government bonds. To reduce risk, banks lend a lot of your money to the government, which we call buying government bonds. This gives the bank a fixed return. Number three, stock market and investments. Yes, banks directly or indirectly trade your money in the stock market, real estate, and other financial markets to maximize their profits. The bank run. But there's a huge risk hidden in all of this. Imagine if the bank has lent you all your money. What would happen if everyone rushed to the bank to get their money back? This situation is called a bank run, when people lose confidence in the bank and everyone rushes to withdraw their money simultaneously. Because the bank only has 10% cash, it can't give everyone their money, and the bank goes bankrupt. This is exactly what happened recently with Silicon Valley Bank in America. But panic, there's no need to do this. In most countries, the government and central banks insure your deposits so that even if the banks fail, some of your money remains safe. So, next time you go to the bank, remember that you're not just a customer there. You're the most important raw material for the bank's business. If you enjoyed this secret world of money video and want to learn more such interesting financial facts, be sure to like the video and subscribe to the channel. Let us know which bank you have a bank account in by commenting below. See you in the next video. Take care.